Okay, so welcome back to my channel again. Today we'll be talking about, or we'll be continuing from where we stopped in the last two series, where we're talking about the obligations of a designated non-financial business and profession. Right, so we have dealt with you having an internal policy. We've also dealt with you designating a compliance officer for your institution or your organization. We've also talked about having an internal audit department who probably would carry out an oversight function on your compliance officer or the department or your section. We also looked at you filing reports, filing your statutory reports, and we mentioned that there are 5 types of report that you ought to file to the Special Control Unit Against Money Laundering. And then number 1, I told you, you're expected to file what is called the cash-based transaction report. You're also expected to file the currency transaction report. And I gave you the instance of you filing your suspicious transaction report, which eventually will go to the Nigerian Financial Intelligence Unit. So the other 2 reports, the politically exposed persons report as well as the new report, are what I'm going to be talking about today. And then perhaps if we do have time, we'll be dealing with the other obligations. As a matter of fact, there are 11 obligations, so we'll be able to talk about 6. I would maybe add 1 or 2 other obligations, to this series, for time's sake, so that we'll be able to handle the obligations that you ought to know about. So quickly, I will just talk to you about your politically exposed persons report. This report, you will have to file it to the Special Control Unit. So a politically exposed person is anyone who is in government, who was once in government, who had opportunities to be able to control public funds, or somebody who is still currently in government, was once in government and still currently in government. Can be either a domestic or a foreign or even an international organization, can be regarded as a politically exposed person. And then the person, his associates, his friends, his relatives or relations are classified as politically exposed person. So if you are going to deal with a politically exposed person, maybe they have walked into your office to conduct any kind of transaction, first you'd have to require management approval to be able to engage with a politically exposed person. And whilst you're doing that, you kind of due diligence you have to undergo is called the enhanced due diligence, where you are asking for further documentation to be able to verify the status of this individual, because by the risk categorization, they have been classified as high risk individuals or high risk persons. So a politically exposed person, by whatever means, whether domestic or foreign, and has the capacity of controlling public funds, was once in government, and is still currently in government as at the time, you are expected to do an enhanced due diligence to be able to ascertain their nature and the type of transaction. Now, this transaction is not based on the volume or the amount. So long as this individual, by your classification and by your customer due diligence verification mechanism, you'll be able to identify that the person is politically exposed, yes, you are expected to file that report regarding the transaction. If you have to consummate that transaction, you file it within 7 days to the Special Control Unit Against Money Laundering. So to file the politically exposed persons reports, you have to go to the Special Control Unit Against Money Laundering website. It's on www.scuml.efcc.gov.ng. I'll take that again. www.scuml, which is scuml.efcc.gov.ng. So on that site, you would see a reporting template. As a matter of fact, you will see 2 reporting templates. One is for DNFBP, which is the designated non-financial business and profession, and the other is for the politically exposed persons report. So you're expected to download the PEP reporting template, and that template has what is called an explanatory note that would explain to you the procedures of how you can file your politically exposed persons report. And then the other part is where you are not going to impute in the details of this politically exposed person. So the report, like I said again, is to be filed within 7 days, and then it doesn't matter the amount of funds that was transferred between the politically exposed person and to you as the business entity. The next obligation we will be talking about or will be dealing with, it's on preservation of records. So this is on Section 8 of the Money Laundering Act, or the MLPPA 2022. It talks about you preserving your records for a period of at least 5 years. And there is a clause there. The 5 years is not as a result of the time frame within which the business was consummated between you and your client or your customer. It is after you have severed business relationship with this client or customer of yours. For instance, I am a customer of yours and I've come to transact with you, especially like I bought a property from you. Let's say you're a real estate firm. I bought a property and you've had my details, whilst the transaction was going on. And afterwards, this property now belongs to me. I've started living in that property, and I don't come to your office for any other thing because the property is now mine. What the law is requiring is that you should keep my details with you for a period of at least 5 years after that transaction has been severed, like there's been a termination of that transaction, right? So you're expected to keep it in a format that you can readily be able to attend to those reports, just in case a law enforcement officer is requesting, or a regulatory body, for example, is requesting to get the details of this client or customer of yours, right? So 5 years period after you have severed business relationship with your customer or your client. This record that you're keeping is as a result of the customer due diligence procedures or measures that you have taken, or even the KYC procedures or measures that you've taken. So everything you gathered in as a result of this customer due diligence procedure, you're expected to keep them for a period of at least 5 more years before you, after you have severed business relationship with your clients or your customer, right? So Sections 9, which is another obligation, talks about communication of these records that you have so kept in the course of your dealings with your customer and your clients, right? So I know there are some business entities that have signed a non-disclosure agreement with their customer and their clients. Non-disclosure in the sense that there is like a confidentiality agreement between you and your clients, that you're not going to expose or you're not going to reveal whatever information in the course of the business transaction or relationship that you've had with this customer client of yours. So, but then Sections 9 is saying this record that you've so kept should be communicated as and when due or when needed, right? Like I said earlier on, a law enforcement or regulatory authority might be requesting to get this record from yours. So what you expected to do is to disclose these records, regardless of whatever non-disclosure agreement that you already had, or a confidentiality agreement, right? So there was a time I encountered a client who told me that so if he had bought a property for his girlfriend and he doesn't want his wife to know, am I not saying that exposing or communicating these records to a regulatory authority might just be exposing the fact that he has bought a property for his girlfriend, So now, whatever agreements, like I said, whatever non-disclosure agreement that you already signed with your client or your customer, or whatever secrecy or whatever confidentiality agreements, when there is a case for investigation and requires that these records be made available, you are mandated, as a matter of fact, as a matter of obligation, to give out the details of this record of this client of yours or customer of yours, as the case may be. There is also the obligation of you conducting training for your staff. Yes, so Sections 10 here, as part of the subsections, talks about you as a business entity or a corporate organization having training for all employees of your organization. This is to expose them to the trends, the patterns and typologies of activities of criminals, right? Because the law, as a matter of fact, too, has been able to change to be able to meet up with the trends, patterns and typologies of some of these criminal activities that is bedeviling our society, right? So you're expected to train your staff, and as a matter of fact, the training has no stipulated time or period. It says you're expected to conduct what is called regular training for all employees, regardless of their status. So you do have drivers, you have some clerks, you have cleaners, you have whatever, in your organization. Get your employees together and get them to know what your organization stands for in terms of AML, CFT, and CPF policies and procedures, right? So these trainings, you can do them at your comfort, especially if you do have some consulting organizations that are specialized in AML, that's anti-money laundering and countering the financing of terrorism training. Or better yet, you could write to the Special Control Unit Against Money Laundering requesting for training. And what we normally would do is that we would send qualified personnel, like officers of the department, to come to the organization to give you this training. The final obligation I'll be talking about in this series would be the duty that you have to report international transfer of funds or securities. So Section 4 of the Money Laundering Prevention and Prohibition Act talks about this, that you have a duty to report international transfer of funds. What does this mean? So there's a limit of $10,000 of funds, whether in terms of funds or securities, they're expected to report within 1 day within which that transaction took place. You're expected to report that transaction to the Special Control Unit Against Money Laundering, or if it's securities, to the Security and Exchange Commission, or if you're a financial institution, to also report that funds to the Central Bank of Nigeria. Right, so the limits of these funds, transfers from whatever countries or whatever jurisdiction it's within $10,000. Right, so you have this obligation, and this is what you're expected to do. If you're in doubt of any of the things that I've just talked about, just to clear your mind, you could go to the Money Laundering Act. It's a public document. You can find that out in open source platforms. And if there are anything that seem ambiguous and you need further clarifications, so my details are there. At the end of the page, you could ask questions, you could subscribe to my page, you could also maybe just send me an email, and I definitely will respond to you as soon as I get them.